Growth stocks are rebounding in 2023, with plenty of others being added to the list. Growth stocks often go through boom and bust cycles, but investors who put in the work can find great values even during periods of expansion. Alphabet. The premier search engine company still has plenty of levers to pull for future growth, particularly in services such as Google Cloud. Axon Enterprise. The maker of stun guns and body cams for law enforcement continues to book record levels of recurring future revenue, even if it is at slower growth rates. Trupanion. The pet insurance leader has only begun scratching the surface of its expansion possibilities both domestically and elsewhere around the globe. Growth stocks abound. It's up to the savvy investor to research them, though. Let's dive in. Here's the 3 growth stocks to buy before the breakout. Welcome to Timely Investment Research. Interested in building generational wealth? Stock investments traditionally perform better than gold, bonds, real estate, and even cryptocurrency. But if you invest in high-potential growth stocks, you better fasten your seatbelt. They can take you on an emotional roller coaster ride. Between November 2021 and December 2022, the growth-oriented NASDAQ Composite Index lost 35% of its value. Year-to-date, however, it has regained 34% of what it lost. That means it still sits well below where it sat 20 months ago. It also indicates there are bargains waiting to be picked up. Growth stock investing isn't for the faint of heart. It requires savvy investors willing to seek out undervalued growth stocks and hold on until the breakout occurs. The following 3 companies are some of the top growth stocks to buy today. Number 1. Alphabet. The owner of dominant search tool Google and video sharing site YouTube remains poised for superior gains in the years to come. Alphabet's search engine sucks the oxygen out of the search market room with a 92.6% share, according to data from Global Stats. Its YouTube platform has 2.6 billion active users, second only to Google itself and Facebook. Both give Alphabet enormous reach and income through advertising. Combined, they provided over $50 billion in revenue in the second quarter, a 5% increase from last year. Yet, the real opportunity lies elsewhere. Google Cloud Services, for example, continues to rack up growth. It nearly doubled its market share between 2017 and 2022, going from 6% to 11%. Cloud generated $8 billion in revenue last quarter, up a whopping 28% year over year. With enterprise cloud spending still in its early innings, the platform could readily challenge Amazon and Microsoft for supremacy. Analysts expect Alphabet to continue to grow earnings at a better than 15% compounded annual rate for the next 5 years. Even with the stock up 46% in 2023, there's plenty more room to run. Number 2. Axon Enterprise. Shares of stun gun and body camera maker Axon Enterprise are down 20% from recent highs. The maker of the Taser energy weapon reported lower than expected first-quarter growth in future contract revenue. Even though Axon booked a record $4.8 billion in the period, that was only 3% higher than it had in last year's fourth quarter. The stock sell-off represents an opportunity for investors. Axon is a smartly growing company. Its less-than-lethal weaponry is an essential tool for law enforcement looking to de-escalate tense situations. Axon's body cameras are also a high-demand product for the protection of police officers and the public. Axon rounds all this out with an evidence database system that is fully integrated into both platforms. Axon's components are sticky. Once a department becomes enmeshed in one of the platforms, it is difficult to extricate itself to go to a competitor. It is also building profitability. Axon Enterprise reported its 5th consecutive quarter of generally accepted accounting principles profits. With revenue surging 34% in the first quarter, analysts are looking for 34% annual growth in profits. Axon doesn't look cheap by traditional metrics of price to earnings or price to sales, but it has rarely traded at so-called normal levels. Look for the stun gun and body cam maker to continue to grow into its valuation. Number 3. Trupanion. Pet insurance specialist Trupanion is the 3rd growth stock ready to explode. As the humanization of pets continues, the need for pet insurance grows. The American Pet Products Association says consumers spent $138.6 billion on pet care last year. Insurance is an area that is just beginning to grow extensively. Grand View Research deems it a $9.4 billion industry that's set to grow 17% annually through 2030. Trupanion is the dominant player in the space with about 30% of the market. The next closest competitor is Nationwide Mutual Insurance with a 19% share. And even though Trupanion derives most of its revenue from the US and Canada, it actually has greater penetration rates in the UK and Europe. North American penetration rates run around 2%. It's at 5.6% in Europe and 11.2% in Australia. That provides for explosive expansion going forward. This is a category still in its infancy, but one that will grow by leaps and bounds in the future. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.